Warren Buffett, one of the world's most renowned investors, once famously said, "If you don't find a way to make money while you sleep, you will work until you die." This quote has resonated deeply within the financial community and beyond, shaping the way many people approach wealth building and personal finance. Its core message emphasizes the importance of passive income, earning money without constant active effort. Over time, this idea has influenced countless individuals to seek investments, businesses, and strategies that generate returns automatically. Today, Buffett's words continue to inspire a shift in financial thinking, encouraging people to prioritize long-term financial security and smarter money management. While the quote is often cited as inspiration, it can also be misinterpreted in ways that lead to unrealistic expectations. In particular, the passive income industry has frequently weaponized this message, promoting the idea that financial freedom is easily attainable without significant effort. This can encourage risky investments or reliance on dubious schemes that promise quick returns. The oversimplification of the quote may cause individuals to overlook the complexities and challenges involved in building sustainable income streams. As a result, some people may experience disappointment or financial loss when reality fails to match the promise. It is important to approach such advice critically, recognizing both its motivational value and its potential pitfalls. In recent years, the concept of passive income has gained significant traction across online platforms. Influencers and self-proclaimed experts often promote the idea that true financial freedom lies in escaping traditional employment, which they label as wage slavery. This narrative sets up a stark contrast between working for a paycheck and pursuing entrepreneurial ventures that promise autonomy and wealth. The allure of passive income is fueled by stories of individuals who claim to earn substantial money with minimal ongoing effort. As a result, many are drawn to the promise of breaking free from the 9-to-5 grind. However, this binary perspective oversimplifies the complexities of work and financial security, often glossing over the risks and challenges involved in entrepreneurship. Many self-proclaimed financial gurus frequently promote passive income schemes as pathways to wealth and financial freedom. Among the most popular are leveraged real estate investments, which involve purchasing properties using borrowed money with the expectation that rental income will cover expenses and generate profit. Online businesses, such as dropshipping or affiliate marketing, are also touted for their potential to earn money with minimal ongoing effort. Another commonly recommended strategy is investing in high-yield dividend stocks, which promise regular payouts simply for holding shares. While these approaches can offer passive income opportunities, each carries its own risks and complexities that are often downplayed in promotional materials. It's important to critically evaluate these schemes and understand the realities behind the promises before committing resources. The idea of effortless, perpetual income has long captivated the imagination, offering a vision of financial freedom without ongoing effort. This seductive fantasy often distorts the original intent behind quotes or advice about building wealth. Rather than emphasizing the importance of hard work, skill development, and strategic investment, it suggests that success can be achieved passively and indefinitely. Such misconceptions can lead people to overlook the realities of market fluctuations, changing technologies, and the need for continuous adaptation. By focusing solely on the allure of easy money, the deeper message about personal growth and resilience is often lost. Understanding the true meaning behind these concepts is essential for making informed financial decisions and setting realistic expectations. The phrase, "making money while you sleep," captures the essence of passive income, a concept championed by legendary investors such as Warren Buffett and Charlie Munger. Rather than relying solely on active labor, these investors focus on building wealth through assets that generate returns automatically. For Buffett and Munger, This often means investing in businesses with strong fundamentals, capable management, and consistent profitability. Over time, these investments compound, producing income regardless of daily effort. The true meaning lies in creating systems and portfolios that work for you around the clock, allowing financial growth to continue even when you're not actively involved. This approach emphasizes patience, discipline, and a long-term perspective, setting the foundation for enduring financial success. Building sustainable wealth requires a focus on ownership, compounding, and front-loaded effort. Ownership, whether in the form of assets, businesses, or investments, provides a foundation for long-term growth. Compounding allows small, consistent gains to accumulate over time, turning modest beginnings into significant outcomes. Front-loaded effort means dedicating substantial energy and resources early on, which often leads to greater rewards down the line. In contrast, chasing quick fixes or gimmicks may offer temporary excitement, but rarely leads to lasting financial security. By prioritizing these principles, individuals can create a resilient path toward enduring prosperity. Legends in the world of wealth creation understand that earning money isn't just about working harder or longer hours. They use active labor strategically, investing their time and energy to build valuable skills and assets. Through patience, they allow these investments to mature, resisting the urge for quick wins. By saving and accumulating capital, they create opportunities to invest in ventures that generate passive income. This process enables them to decouple their time from their earnings, meaning their wealth grows even when they're not actively working. Ultimately, this approach leads to true sleep money, income that flows in regardless of daily effort, providing lasting financial freedom. Throughout history, legendary strategies have shaped the way individuals approach financial decisions and personal well-being. However, as times change, modern interpretations often diverge from these foundational principles, creating a gap that can lead to confusion and missteps. Within this gap, three major traps frequently emerge, threatening both peace of mind and financial stability. The first trap involves chasing quick wins without understanding underlying risks. The second is relying on outdated advice that no longer fits today's dynamic environment. Finally, the third trap is neglecting emotional discipline, which can result in impulsive decisions and long-term regret. Recognizing these pitfalls is essential for navigating the complexities of modern life while preserving both financial health and inner calm. Many real estate investment opportunities are marketed as effortless, passive income streams. However, highly leveraged deals often come with significant risks that are rarely discussed upfront. When investors take on substantial debt to acquire properties, the financial pressure can quickly transform what was promised as a hands-off investment into a demanding second job. Unexpected vacancies, maintenance issues, and fluctuating market conditions can require constant attention and decision-making. The reality is that high leverage amplifies both potential gains and losses, leaving investors exposed if things don't go as planned. It's important to recognize that passive income is not guaranteed, and the responsibilities involved may be far greater than anticipated. Many people are drawn to online businesses and digital products with the promise of passive income. However, the reality is often quite different. Maintaining an online business typically demands ongoing effort, from updating content and managing customer inquiries to staying ahead of competitors and adapting to changing algorithms. This constant need for attention can feel like running on a treadmill, always moving, but never truly able to step away. Instead of passive earnings, entrepreneurs may find themselves working just as hard as they would in a traditional job. The allure of easy money can mask the relentless commitment required to keep digital ventures afloat. Understanding this dynamic is crucial before diving into the world of online side hustles. Chasing exceptionally high dividend yields can be tempting, especially for investors seeking regular income. However, this approach often comes with significant hidden risks. Companies offering unusually high yields may be struggling financially, using elevated payouts to attract investors despite underlying weaknesses. Such dividends are frequently unsustainable and may be reduced or eliminated if the business faces further challenges. Additionally, focusing solely on yield can lead to overlooking important factors like company stability, growth prospects, and overall market conditions. As a result, yield chasers risk capital loss and disappointment when dividends are cut. Understanding the balance between yield and sustainability is crucial for long-term investment success. Honoring the spirit of the quote means shifting your perspective on wealth building. Instead of viewing your job solely as a source of income, see it as a powerful tool to fund your financial future. By consistently saving and investing a portion of your earnings, you lay the groundwork for long-term growth. Patient, disciplined investing allows your money to compound over time, turning small, regular contributions into significant wealth. This approach emphasizes steady progress rather than quick gains, helping you build financial security through thoughtful planning and perseverance. Low-cost, globally diversified index funds have emerged as one of the safest and most reliable strategies for building lasting wealth. By spreading investments across thousands of companies worldwide, these funds minimize risk while capturing the growth of global markets. Their low fees ensure that more of your money stays invested, compounding over time. Unlike trying to pick individual stocks or time the market, index funds offer a simple, hands-off approach that requires minimal effort. This makes them ideal for creating sleep money, wealth that grows quietly in the background, allowing you to rest easy. Over the long term, consistent investing in diversified index funds has proven to outperform most actively managed strategies. For those seeking financial security without constant worry, this approach stands out as a dependable choice. Radical diversification involves spreading investments across a wide range of asset classes, industries, and geographic regions. This approach helps to minimize risk and reduce the impact of market volatility on your portfolio. Equally important is emotional discipline, which means resisting impulsive decisions driven by fear or greed. By maintaining a steady, long-term perspective, investors can avoid common pitfalls like panic selling or chasing short-term gains. Together, radical diversification and emotional discipline create a powerful foundation for compounding wealth over time. They also contribute to a greater sense of security and peace of mind, allowing investors to navigate financial markets with confidence. The true reward lies in constructing a fortress of high-quality assets. These assets serve as a foundation for lasting safety, peace of mind, and effortless management. Unlike fleeting trends and hype-driven investments, sustainable strategies offer resilience through changing market conditions. By focusing on quality and long-term value, you create a buffer against uncertainty. This approach not only protects your financial future, but also brings a sense of stability and ease, making your journey smoother and more predictable. In the end, it's the strength and reliability of your assets that deliver the ultimate payoff. As we reach the end of our exploration into popular passive income ideas, it's important to reflect on the insights we've gathered. Not all passive income strategies are equally effective, and some may require more effort or risk than initially expected. By critically evaluating these options, you can make more informed decisions about which paths align with your goals and resources. We encourage you to share your own experiences and perspectives, as your thoughts can help others navigate this complex landscape. If there are specific topics or income strategies you'd like to see analyzed in the future, feel free to suggest them. Together, we can continue to deepen our understanding of financial opportunities and challenges.